Alright, everyone. I just spent about 20 minutes talking to my computer, and it wasn't recording. So I'm going to do this again, but I'm not doing a whole top-down analysis. I'm not doing all this and that. I'm going to do a real short and sweet video on one setup that I saw today. So let me get to the right chart here. We're looking at NASDAQ futures on January 11th, 2024. Today was FOMC. 4 red file news drivers on the US dollar this morning at 8:30. Go to a 5-minute chart here. I was on the marketplace this morning. I was not during the afternoon. First things first, I'm not legally authorized to give trade advice. And, even if I was, I probably wouldn't listen to myself because I don't know what I'm talking about. So, don't listen to me. I don't know what I'm saying. Go straight down to a 1 minute. No, I'm not going to do that yet. Here. Relative equal lows here. And this right here is a large buy-side imbalance on the 1 hour chart. Might as well just show you that. Here you go. So this was the draw on liquidity this morning. We moved from the stop rate, which was here, down to our target, which was these relative equal lows, and this buy-side imbalance was 16,806 to so about 240 handles, even a little more. 240 points on this move this morning, so pretty sizable move. So here's the draw on liquidity, and here's a trade that I saw. Right here, price breaks these lows, runs up into the premium range of this price move, runs up into the sell side imbalance here. Aggressive move out of this sell side imbalance, creating a fair value gap. Price trades back up into the fair value gap, trades in the fair value gap for about 15 minutes, and then sells off to the target, about 130 points down. Give or take. So pretty sizable move, good setup. I did take this, but I didn't do my due diligence this morning and do a top-down analysis and come out with a defined bias, and I didn't go through my other charts, such as ES versus NQ for divergence, or the dollar index versus NQ to see where the dollar wanted to go. So I was lazy, so to speak. So I sold short here, and I felt as though I was trading with my emotions instead of with logic, which I was. And I'm glad that my emotions are correct, but that's not how I trade. That's not how I want to trade. It's not how I'm going to trade. It's not how anyone's profitable, so it's not the way to do it. And so as soon as I clicked the button, I said, no, this ain't right. So I got out of it, which is fine. That's what I should do. That's what everyone should do. If they're in a trade and they're not 100% sure why, get out of the trade. So this is one setup I saw. Looking at market structure from a 5-minute chart. Long-term high, intermediate term high, lower intermediate term high. Low, higher low. Because this low here balanced these imbalances, that makes it an intermediate term low. Price breaks that intermediate term low, breaks the short term low, breaks the short term low, breaks all these lows. So now we have lower highs and broken lows. So that's bearish market structure. Price runs up into a sell side imbalance in the premium range of this price leg. Trades out of that imbalance. This is that fair value gap on the 1 minute chart. Trades out of it, creates a fair value gap. Trades back up into that fair value gap and sells off. And if we look at this here, when price came out of this fair value gap with an energetic move, created another fair value gap, it also did break these lows here. So there were a lot of confluences indicating that price was going to go lower as far as higher time frame market structure and the draw on liquidity, these lows and the large buy side imbalance on the 1 hour time frame. So it was a great trade. I didn't have all the variables at the time and I wasn't confident, so I got out. So that's just one trade I saw today.